and help you pick the right stock at the right time.
Well, good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. Just checking my phone. Yes, it is all right. I'm Neeraj Shah. You're watching Indian Open, and it's not as gloomy a day as it was yesterday. Let's hope that on the world markets as well, the gloom and doom at the Asian markets doesn't really percolate too much onto the Indian markets. Let's take a look at the headlines and the newsmakers at this hour. Global equities slide after Europe and China warn of a recession if the trade war escalates any further. The dollar continues to weaken against major currencies. SEBI favors adjudication proceedings against ICICI Bank and Chanda Kochhar, reports PTI. The banking regulator has also initiated a second probe after the third whistleblower complaint came to light, according to the Mint. Fortis Healthcare seeks another day to report its financial statements. Says board will meet again today to deliberate on the annual accounts. An automotive part manufacturer, Varroc, is looking to raise a little less than 2,000 crores from the primary market. Well, it's interesting what we have lined up over the next 2 or 3 days. Fortis, Manpasan, a bunch of very key numbers to watch out for. However, let's take a look at the trade setup for the day and how it is turning out, or how it could turn out to be. The expiry week trades on Monday started off with a bit of a flux, if you will. They were marked by very, very low cash market volumes, and that's something to note. In the last few days, yes, they've been low, but on expiry day 2 or expiry week 2, Monday, cash market volumes yesterday were very, very low. So we came off, but didn't come off on very high delivery activity, to be honest. And mid caps cracked in late trade yesterday until about 2 p.m. The mid cap index was lying absolutely flat. It ended the day about 0.8% lower. So the last 1.5 hours, mid cap stocks just cracked in trade. The market breadth was adverse at about 1:3. So that side of the market is not really finding any kind of momentum at all. PSU banks cracked in trade yesterday. I remember Darshan spotting them at about 3 o'clock or thereabouts, but Allahabad Bank, Union Bank, Canara Bank, a clutch of these PSU banking stocks came off quite rapidly in the session yesterday. And the bias of the short-term trades, until yesterday morning at least, was on the upside. People were talking about maybe trying to go long, and if that thing worsens, then we might just have some sharper cuts as well. The flows not too great. In fact, provisionally, I think we saw, there was a buy number, just a tiny toon buy number. So after a long time, maybe we saw this, or one of the rare instances in this month as well, when we see a provisionally positive number, but just about 200 odd crores, so nothing really to write home about. It's just the interesting list of stocks which are starting to hit those 52-week lows now. We've had a clutch of other suspect names do that, but look at the list now. Aditya Birla Capital, no doubt, has not rewarded, but just continues to grind lower. Gujarat Pipavav, Motherson Sumi was at 52-week lows yesterday. NBCC continues to slide lower. Bank of Baroda and some of the other PSU banks too. So the list of stocks at 52-week lows does have some fairly high quality names as well, and that's a bit of a concern maybe for the markets. Among stocks to watch, well, we told you about ICICI Bank, and I'll talk about that too. But first, Tata Motors. The stock has cracked the most in the Nifty components yesterday. Delivery volumes not that great, but 5%, some short build-up as well. Tata Motors will be an interesting one to watch out for in the session today, whether the disappointment that came out post the JLR meet continues. KRBL, the volumes were 2 times the 10-day average, but only 20% mark for delivery. Just shows that a fair bit of trading that happened, and not enough stocks which were sold out in the market were bought for delivery as well. Maybe some more pain out there, 20% lower, and maybe some more pain on that one yesterday in today's session as well. Tube Investments, the reason why this is important, even though it's a small deal, is because Enam Securities have acquired about 11.7 lakh shares. These are long-term investors, and typically Enam has a lot of these Murugappa Group, Chola Group companies in their portfolios. They've acquired additional 0.64% stake at 222. Remember, almost everybody who's in the market is now saying that the damage on the mid caps and the small caps individually seems to be overdone. There are some very attractive pockets available. Maybe this is one such reason why they are doing so. And last but not the least, ICICI Bank. Remember, it was the top contributor in trade yesterday. The stock was down 3.5% in the session yesterday, but in just in terms of points contributed to the Nifty, it was a top contributor. Now, this whole the recent developments against the bank and against Chanda Kochar, all of that could continue to weigh in on the stock. It's not something that will sit down well with investors by and large. So 289, I know it's a cheap corporate bank. I know a lot of people have said that it might be worth going out and buying it, but there might just be some technical pressure on the stock continuing. The market mood isn't the best either, so you got to keep that at the back of your mind before you do that. Speaking of market mood, just before we move on to the first word headlines, let's just tell you what the market mood is looking like. The US market shut shop on a fair bit of negative note yesterday. The Asian markets have taken some cues out of that. Hang Seng is down almost 400 points. Shanghai about 1.25%. Nikkei is down about 0.5%. And the SGX Nifty this time around could well turn out to be a correct lead indicator. I won't be surprised if we start off about 50 points lower on our markets as well. The SGX Nifty already showing that hand. I repeat, it's not been a correct lead indicator in the recent past, but maybe, just maybe, it could turn out to be a correct lead indicator now in today's session. Okay, so what is it that we should focus on first word? It's the collection of the top editorial stories that we believe we should bring to you first up. Cement, multiple stocks are hitting 52-week lows. We talk about why cement firms haven't managed to make the most of the rising construction activity in the first 6 months of the year. Steel Authority of India has listed out its final product mix after the expansion plan is complete. Nikki talks about the now and what will happen post. And we talk about why is it that the Indian small caps are performing so poorly at a time when some of the other world market small cap spaces aren't doing all that bad. So let's talk about all of that starting now. SAIL had a capex of more than 4,000 crores in the last financial year alone. The state-run steel giant has now disclosed its product mix after the upgraded and new plants start production. Nikki Mirchandani, who's gone through the presentation, joins us right now for more. Nikki, the focus is clearly on moving up the value chain.
Morning, Neeraj. Well, SAIL yet again has missed the target for FY18. If you look at the company's objective of being the largest steel company by FY18, though on expected line, but then the company now ranks second in terms of the largest producer, with the first one being JSW Steel with a capacity of 18 MTPA, second one being SAIL at a capacity of 15 MTPA, and Tata Steel as of FY18 stood at 13 MTPA. Now the company is expected to be a 21.4 MTPA capacity only by FY19. However, if we are supposed to look at the expansion plan for the company, hot steel is expected to go from 15.9 capacity to 23.5 capacity post expansion. Crude steel production is expected to go up higher by 15 at present 15 capacity to 21.4 capacity. Saleable steel too is expected to inch up to 14.07 MTPA capacity to 20.2 kind of capacity. With this kind of capacity coming on board, we are also expecting a kind of product mix to take place, a shift rather to take place. A major area we need to really be bothered about is the structurals. In fact, that's a good thing, which has actually moved in from the company from 7% currently to 11% post expansion, and also the company mix is now tilting towards from HRC to CRC, which is a higher value added product. So definitely this bodes well for the company. Also, if you look at the raw material sourcing of the company, that is also expected to go higher for the company. With the higher capacity coming in, iron ore capacity is expected to increase, or the consumption is expected to increase from 25 to 39, while that for coking coal is also expected to go up higher from 15.39 to 19.5. Now, for iron ore capacities, if you look at this chart, you have the existing capacity and after expansion capacity for most of the mines which are listed here. But then the second plate that we have, that's where the capacity expansions take place, which mean that the iron ore capacity, the company has enough linkages for iron ore capacity. However, for coking coal capacity, it might have to explore new linkages. Last slide that we have for the company for SAIL, well, it's the falling capex. The company had earmarked a 4,700 crore kind of capex for FY18. That exceeded the target to 5,130, which means it has almost spent most of its capex to develop the mines and source the kind of raw materials. With that, we are expecting the FY19 capex to be lower at 4,000 odd crore. Back to you, Neeraj.
Well, Nikki, thanks for putting that into perspective. SAIL, the then and now, or rather the now and then, let me rephrase myself. But yeah, commodities have been on a bit of a downtick, and that's visible in some of the base metals or the steel companies as well. Speaking of commodities, the next focus is also on that space. The thrust on affordable housing, more road contracts, and an overall pickup in India's GDP. All these factors usually trigger good for cement companies, and they tend to move higher. This year's, though, proving to be an exception, with almost all of the heavyweights trading with cuts of at least 10%. So what's held back these companies? Yash Upadhyay is here with the details. Morning, Yash.
Morning, Neeraj. So almost half a dozen cement stocks, they are very close to their 52-week lows. So we start off with India Cements. That is down almost 40% on a year-to-date basis, followed by ACC, who is down about 25%, followed by Ambuja, 24%, and JK Cements, who are all down about more than 20%. Also, we are looking at Ultratech and Shree Cement. They are down anywhere between 13 to 13.5%. So what is it that's ailing the industry, and what are the challenges lying ahead? So first up, there is a clear demand-supply mismatch. As per the latest FY18 data, the all India cement capacity that stands at about 450 million tons versus the India requirement of close to 300 million tons. So there's a clear 50% excess supply, with the cement manufacturers, they are operating on an average of 60 to 65% utilization levels. To add to this, the cement companies, they are looking to add nearly 65 million tons in additional capacity over the next 2 to 3 years, according to a latest report by Investec. And a major share of that would be coming up in the south region. So nearly 61% or 13.5 million tons of that excess capacity, that would be coming in the south region, where already the utilization levels are less than 50%. Now, interestingly, 40% of this is brownfield in nature, which means that the capex intensity will be lower and the timelines will be faster, because the project related delays that won't be taking place. But let's also take a look at the companies that are expanding their capacities, and that includes the likes of Ultratech. Now, they have a current capacity of as much as 67 million tons. They are looking to increase it to up to 88 million tons in this year, and even further to 93 million tons in the year after. For Ambuja Cement, their capacity stands about 67 million. They have not guided for any increase. Followed by Shree Cement, their current capacity stands at about 27 million ton. They plan to increase it up to 41 million. Ramco Cement has a capacity of about 16 million. They plan to increase it more than to about 20%, 20 million tons. And we're also looking at India Cement and the smaller players like Star and Sagar Cement. But that's not all. Pricing has been a key issue for the industry. Now, we've seen that after 2 consecutive months of price hikes, in the month of June, the all India average prices, they were reduced by about 3 rupees per bag to 328 rupees. However, the cement prices, they have been on a gradual decline, and after increasing by 9% in the first quarter of FY18 to accommodate for the impact of GST, they have gradually declined, and in the first quarter of FY19, we've seen that prices have been cut by almost 7 to 8%. So that is another issue which is bothering the industry, but also the hardening of energy costs. Now, we've seen that power and fuel and freight costs, they typically account for almost 50 to 60% of a cement company's operating costs. Now, that includes the crude oil prices. As we know, crude oil prices, they are currently at fresh 4.5-year highs. So as a result of this, the retail diesel prices, they have been pushed to an all-time high in the month of June. Also, the non-coking coal prices, they have gone up significantly. As you can see, the chart shows that the non-coking coal prices, they have increased considerably in the last 6 months, and the ex-factory pet coke prices, they have shot up by 18% in the first 6 months of 2019, starting at about 7,100 rupees in the month of January to almost 8,400 rupees in the month of May. As a result of this, the entire cement bag, that is under severe stress.
Interesting. Yash, did you have any chance to speak to companies or dealers about what the pricing scenario is? Because the last couple of days there have been some rumors about there being price hikes in the northern part of the country.
Right, so we've tried contacting one of the cement companies, but we are yet to receive any formal response. Our dealer checks, they seem to suggest that the prices, they have been correcting in the last month or so, but there is no clear indication that the prices would increase. And because of this excess supply and the sluggishness in the demand, the EBITDA margins, or the operating margins of companies, they would be under severe stress. So that EBITDA margin picture, that should come up. As we've seen in the last quarter, the EBITDA margins on a sequential basis for these companies, they have gone down on an average of about 200 to 250 basis points. So that is another issue that the cement industry is facing at the moment.
Well, we saw signs of that, but clearly, if the channel checks are to be believed, Yash, there are no price hikes, imminent large price hikes that have happened already, right?
Yeah.
That's what dealers are telling us.
That's right.
Okay, at some point of time during the day, we'll get in the response from the companies to whom we have mailed as well yesterday, and we'll keep you updated with what the companies have to say about pricing as well. But for now, seems to be under pressure. No surprise there that the cement companies are doing what they're doing. I mean, Shree Cement is a classic case. It's not a very liquid stock. It's one of the most efficient producers, and if that company is trading at 52-week lows, off about 15-16% from the YTD highs, and it tells you something about what the stock or what the industry is going through. Actually, speaking of that, the final piece on First Word today is on the small cap space, and I must tell you that while Indian markets have been under pressure for the last couple of months, the correction in the broader markets been much worse. That everybody knows. The BSE small cap index has fallen about 8 times over the past 9 weeks, but it is not necessarily a global phenomenon. It is something that is in select countries, and I bear this point out via a couple of charts, and then just looking at what some of the stronger hands in the Indian markets are doing as well. So the small cap index first down 8 of the last 9 weeks, and this is the YTD chart of the Nifty 50 versus the mid cap and the Nifty small cap index. Needless to say, the yellow line that you're seeing on your screen is the small cap 100, and that one has corrected quite meaningfully. You can see the white line, which is the Nifty 50, from the starting point till the end. It's still marginally positive, but not so much for the mid caps and definitely not for the small cap space. So the YTD performance clearly shows that we are under a lot of pressure. I mean, by we I mean the small caps and the mid caps in India are under a lot of pressure. Now contrast this with what's happening, say for example, in the US markets. The small cap indices, the small cap stocks for the last, whatever, 2 years or thereabouts are actually outperforming in the US. Now, maybe the lower taxes, the nationalistic policies are all aiding, but this is the chart that I've borrowed from a Morgan Stanley report, and it clearly shows that the S&P small cap 600 index or the Russell 2000 index has done much better than what the large caps have done. And even if you look at the fag end, which is post-March 2018, it has been on a rising trend. So out there, the mid caps and the small caps are not correcting. This is the chart that I'm talking about, the last fag end of the chart, which is from April to June. The small caps and the Russell 2000, which is the broader index, has actually outperformed the S&P 500. People are talking about how even the growth prospects, the EBITDA margins for the small caps out there in the US, all of them are pointing towards maybe, just maybe, some more upsides to the small caps compared to the large caps as well. So out there, that things seems to be okay. The earnings growth differential might also aid. This chart is the Russell 2000 versus the S&P 500, the next 12 months EPS, the blue line. And as you can clearly see, that blue line estimates are actually rising up for the small caps, and maybe which is why out there in the US, the large caps are not performing as well as the mid caps. This is the point. This is the line that I'm talking about. The blue line moving up clearly shows that the earnings expectations for the small caps in the US are much better. Now contrast this with what's happening in India. Strong, weak, very strong, whatever the names may be. Say for consumption and financial names, there are stocks which are hitting fresh lows. So look at this list. Now stocks which are at 52-week lows, I spoke about some of these in my opening chat as well, but AB Capital, BOB, GPPL, Motherson Sumi, NBCC, these are all stocks trading at 52-week lows. Stocks, strong names which are off from their recent highs, some with reason, some without reason. So Sterlite Tech, Motherson Sumi, Bharat Forge, Godrej Properties, KRBL of course has reasons, but Motherson Sumi, Bharat Forge is business sentiment. Godrej Properties, the management was very confident, but sentiment pulls the stock down 17%. Shree Cement, Yash was just talking about it, down about 60%. Delta Corp down 30%. SRF, something that we were talking about yesterday, down about 30% from the recent highs. So the correction in some of these stocks has been fairly strong and just shows the pain at the broader end of the spectrum. A bunch of technical factors at play. I was speaking to somebody yesterday who said that post the long-term capital gains tax being applied, they sold out of some of the stronger names, and those stocks are available 15, 20, 25, 30% lower, 40% lower in certain cases, and strong names. So that was a trigger. The rejig in mutual fund schemes, a lot of people believe that that was a trigger, and until June plays out, that pain will continue to last. The additional surveillance mechanisms in a bunch of strong names, HEG, Graphite India, for example, fairly strong names, but those ASM measures came in and those stocks got punished as well. The problem is the market believes The small cap index is overvalued because the earnings expectations, unlike the US markets, is not that strong in the Indian markets. And therefore, you remember the chat that we had with Gautam Chowcharia, and I urge you to go up to the site and look up that chat as well. But UBS came out with that note. And in that interaction, he told us that the mid-cap index, and I quote him, that even after the correction, the mid-cap index is trading at about a 20% premium to the Nifty on a forward earnings basis versus the historical average of trading at a discount. This is Gautam Chowcharia telling us on June 7th that the mid-caps are still trading at a premium. Even after that correction that we've seen post June 7th, if that's what you believe in, then the premium has not gone away. And let's try and find that out. What does the Bloomberg terminal say about earnings? This is the estimated price to earnings ratio for the Nifty, for the mid caps, and for the small caps. And as you can see, that for the Nifty mid cap 100, the expectations are high, which is the blue line, which is the top line. Let's drag the screen, let's drag the camera to the wide end of the screen. And the last lines, these 3 points are the crucial ones. The blue line shows you that as of now, the earnings estimation for Nifty mid-cap 100 is well. But look at the small caps, the Nifty small cap 100, people hardly estimate their earnings to grow. So if the stocks are still premiumly valued, but the earnings estimates are not there, why pay the premium? That's, I believe, what almost every single large, mid, small cap market expert is talking about. The last thing that I have to say out here is that it's not that it's only the individual investors have been hurt. A bunch of small, mid cap focused funds as well, which really haven't done too well, and it's just borne out by this. The worst performers: Sundaram small cap fund down 18%, DSP BlackRock small cap fund, very haloed fund, down about 17%, the SBI small cap fund down about 17% as well. So if you are in that bunch who's lost a lot on the portfolio, you're not alone, if that is any solace. Expert money managers have also lost quite a bit of money and quite a bit of NAV YTD because of the carnage that we've seen in the mid caps and the small caps. But pain galore, and India is not really a part of the gang. In certain cases like the US, which are the exception to the rule, small caps are still doing well. So we have our specific problems which are leading to this fall. But I guess that's all that we have on First Word today. We'll talk more about this with our market experts as well a bit later on, and which is, a bit later on in the show, we'll also discuss the impact of rising raw material prices on Avanti Feeds, a small cap again, or a mid cap, which has corrected. The managing director, Mr. Alluri Indra Kumar, joining in to talk about that. And Dollar Industries, that page and some of the others are making a mark in the premium segment, and which is showing in the stock price. The company's vice president, Ankit Gupta, joins in to talk about that. But after this break, a full tilt towards the day's trade. Stay tuned to BloombergOpen Live.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open on Bloomberg Quint. Let's see how the Asian markets are faring at this point of time. Most of the Asian markets are trading with heavy losses. The Shanghai is down 1.5%, the Nikkei is down 0.5%, and the Hong Kong markets are down over 1% in trade. The SGX Nifty has widened the losses. We are close to the going below the 10,700 mark in trade. So extremely weak start is expected from our market. But Agam Vakil joins us. Agam, yesterday significant amount of call writing happening at the higher level. What I've noticed is that the 10,700 put has a substantial high amount of open interest. We are coming in very close to that level. Can we see more selling that will come in, and can we see more call writing if this trend continues?
Well, Darshan, you rightly put it. 10,700 has the maximum open interest. That's a 10,700 put, and that is expected to provide some amount of support going in. But let's just wait and watch as to how the markets develop. For now, in terms of the Nifty, we started to see a little more short build up coming through. Moving to the Nifty Bank futures as well, the scene is not very different. And rollovers, do remember, have been very low for both the Nifty as well as the Nifty Bank futures. Of course, this number is expected to pick up. But to what extent can we expect the traders to carry on their positions to the next series? That's something that we're going to have to watch out for. Moving in, the India VIX, as one might expect, also gained as much as 4% at around 12.6. It's still below the mark of 13. It's only about the mark of 13, 13.5 when things can get a little worrisome. The Nifty put call ratio also edged lower as the Nifty fell at around 1.48 against 1.65. And with respect to the changes in open interest, what we've started to see yesterday was more writing in the 10,800 and the 10,900 calls, and unwinding coming along in the 10,700 puts. So this is something that traders just may be worried about a tad bit. Let's also take a look at the open interest distribution across series and see whether or not that has affected, that unwinding has affected the 10,700 put, and not really still has a max OI, and that will provide you with support. And on the gaining end, of course, as you can see, you will see resistance at 11,000, but that's a little bit of far out in the future, considering we are closer to the mark of 10,700 today. In terms of stocks, I'm watching out for RBL Bank. Now that has moved up, and we started to see some longs building up. And along with RBL Bank, the other stock which has also started to see longs is TVS Motor Company. On the losing end, and there were a lot of losers out there, SRF continues to grind lower. In fact, now edging towards the mark of 1660. More weakness coming through there. And well, other than SRF, we also have weakness in United Breweries that also was down by as much as 4% near, well, a substantial amount of added when it comes to the July futures towards shorts. Along with these counters, there are several others like Motherson Sumi and Bajaj Finance, which did see a substantial increase in open interest, and we're going to be watching out for these counters as we move into trade today.
We certainly are. Agam, thanks for putting that into perspective. Yes, the liquor companies standing out as the sore spot amongst the companies at the consumption end, because everything else, the innerwear companies, the other consumption companies, all of them are doing well, but somehow these liquor companies are not quite being able to do that. So that's a bit of a pickle that we're seeing in the markets. United Breweries, United Spirits, almost all of them came off, and came off quite rapidly in the session yesterday. The stock of the morning, though, could well be ICICI Bank as well. The stock was down 3.5% yesterday, was amongst the top contributors on the Nifty yesterday. And this piece of news might just not sit down too well. I'm not saying it will lead to a big crack. It will not sit down too well with traders and investors by and large.
No, obviously it won't, because as we were speaking yesterday, in terms of in countdown, that no one likes any issues with any kind of corporate governance in any bank, and somehow the mood that of the management change that happened, the enthusiasm that has fizzled out for ICICI Bank. So that's about it. And Neeraj, two stocks I'll be really interested in watching today. First of all is InfoEdge. Did that investment in e-tech cases, PolicyBazaar, so that's a positive that's coming. And secondly, I'll watch out for Tube Investments, because Enam has bought in. And Neeraj, you can speak about all the market veterans and all, but somehow Enam stands out. Take a look at the history of. It's been that we've been following markets for so long. Just take a look at the investments like MRF or a JSW Steel or an Infosys for that matter. It's Enam that they stick with companies for a long time, and somehow the returns always come to them. So Enam, despite some of the mid caps and all, some of the other investors come in, but when Enam buys, they know what they're doing.
Sure.
That's what the point I want to put across.
Well, let's wait and watch what happens there. Mayuresh Joshi is with us. He's fund manager at Angel Broking. Joins us right now on the show. Mayuresh, good having you. Thanks so much for joining in. You know, we're just talking about ICICI Bank. SEBI's favored their adjudication proceedings against the bank in Chanda Kochar as well. This is as per the reports from the PTI. Now, my question to you, Mayuresh, is that almost all the matters are known, but this is a moving piece because we'll keep on hearing news flow with regards to how the probe moves ahead and what the resultant impact could be. My question to you is, all of that will have an impact on the banking performance or the bank's performance per se. What about the stock market performance? Do these valuations price in these moving parts that we will face from ICICI Bank's side over the course of the next 3, 6, 12 odd months?
So morning, Neeraj. I think whatever developments will take place in terms of any proceedings against Chanda Kochar or the management in general, I think the bank or the stock markets will probably take that into their own stride. A large element is how they're going to probably transition the entire issues at hand and how they're going to grapple with that over the next few months. So I think what we've been hearing over the past few weeks and months, I think that can very well linger on, as you rightly said, both from a legal standpoint and even from an investigation standpoint. So a large element of what we've always maintained is that if you leave this aside, because the markets have largely discounted this through, if nothing comes out of the probe, I think it's a welcome sign. I think if any developments happen on that front, how the bank probably reacts in terms of the transition, you've already seen one in terms of the COO getting appointed. So that is one aspect that the markets have probably just stated the facts about the case. The second element, as you rightly pointed out, is reverting back to core fundamentals. So again, I think the retail advances have been pretty solid for the bank. What you're probably talking in terms of recognition in terms of both asset quality issues persisting from the corporate stroke SME side, largely accounted for. I think the next 2 quarters you might still have provisioning, both in terms of the watch list, in terms of any power or the other corporate stress related assets and NCLT cases. But that again, I think should start normalizing with credit costs tapering off. As I said, I think retail advances growing at a very fast clip, almost 50 to 53% of the total advances. So I think the balance in terms of stable asset quality going ahead, credit costs dwindling down, and at this point of time, I think valuations and ROAs and ROEs both staying at lower levels is a huge scope of improvement on those fundamental parameters. So my own sense, as I've always maintained, I think, is that if the stock corrects significantly because of sentimental issues or because of market conditions, I think the long-term story fundamentally stays intact for the bank.
Okay, Mayuresh, just hold on. Our research team is ready with all the stocks that you need to watch out for. An interesting development on the part of InfoEdge, where they are investing more in PolicyBazaar. An interesting note by CLSA on Ultratech. Cement seems to be, the flavor of the market recently. Also, the news of JP Associates looking to sell some of their plants to ACC. So cement is definitely in focus. But Shraddha, we'll start with you. Which are the important stocks that we need to watch out today?
Darshan, I'm going to start off with Ratnamani Metals and Tubes. They've received a domestic order for pipes worth 125 crores. You have Jet Airways, which has entered into another agreement with the Boeing company for 75 Boeing MAX aircrafts. You have United Spirits, which has acquired 26% stake in a digital payments company called Hibbar for 27 crores. A relatively smaller amount, but they've said that the platform can provide growth opportunities for the online or e-commerce route for growth. You have JP Associates, like Darshan mentioned, the ET report which says that they're looking to sell their residual cement business to ACC for 5,200 crores. So let's see how that one reacts. And lastly, you have a ET report which says that Railways will issue the largest order, that is for about 22,000 wagons, and the ministry is hoping that the tender bulk tender would actually help reduce the cost of wagons by 15 to 20%. So it might be relatively low margin order, but definitely a volume game for the likes of Texmaco Rail and Titagarh wagons. So those are also some of the names to watch.
Okay, we'll watch out for all those counters, but an interesting note by CLSA on Ultratech. What are they saying?
They've
Maintain their buy rating and the target price of around 5,000, which indicates a potential upside of 33% from the current levels. It says that a significant year for Ultratech due to acquisition and integration of JP units, and it also talks about the decade-low return ratios of the company and the negative FCF. However, they do highlight that the balance sheet currently, which is at net debt after turning net cash in FY17, but still the level remains quite comfortable. It says that the industry is expected to be a profitability. It's expected to focus on profits rather than volume chase is the story that we saw in FY18. It, however, expects the EPS to be diluted by as much as 24% on acquisition of Binani and Century, given the kind of capacity. In terms of PE of FY19 for calendar year FY19, it says that 29 times is higher as compared to the industry PE of around 20 times. However, that needs to be viewed in light of the improving fundamentals of the company.
Okay, so we'll watch out for Ultratech and the other cement counters today. But the interesting movement that happened yesterday was Info Edge taking more risks. Actually, they're investing more in e-tech cases or PolicyBazaar.
Right.
What do you make of it, and what are the brokerages saying?
Well, it's certainly, brokerages are certainly happy with it, Morgan Stanley specifically in this case. But let me just start off with the news flow right now. Info Edge will invest $45 million in ET Chases, and this is the owner of PolicyBazaar. Do remember that Info Edge is already invested in PolicyBazaar, has earlier, and the first investment they put in was back in 2008. This time around, they're putting in $45 million along with SoftBank, who will also put in $45 million together, and this will be through a subsidiary, Dibda. So this will also increase Info Edge's stake in ET Chases by as much as nearly 9%. Morgan Stanley, of course, is constructive on this particular development. They suggest that the move signifies the company's appetite to go for larger deals depending on the opportunity, and the move also shows the willingness to defend and increase stake in existing investee companies. And based on this, they say that implied gross value accretion for the stake will be around 3.2% at current stock price, and the value assigned for Info Edge's stake in the company will move up from 26 rupees per share to as much as 63 rupees per share. Do remember that around $45 million comes to roughly a little over 300 crores. So that is the quantum by which their stake goes up in ET Chases.
Okay, so that's what we'll watch out for. Mayuresh, do you like Info Edge, and what do you make of the news that came in overnight?
No, so I think, Darshan, what probably needs to be deciphered in this aspect is how these investments are going to play out over the medium to long term. Obviously, what they have invested in Zomato a few years back, I think that is probably giving them and yielding them good results in terms of the implied valuation. But they've also got a lot of investments stuck up in their other subsets, which probably are just picking up steam at this point of time. So if you look at their core business, I think that is doing exceedingly well. We are probably looking at implied valuations of Zomato also probably moving up significantly over the past few years. And again, I think the kind of stake sales they've done and the implied valuation that Zomato has got is probably keeping it in good stead. So I think these investments are probably in the right direction, because they need to keep on pumping money into their other lines or sub-segments of their business. Because I think the digital competition is so intense that if you don't have this investments put through, you might probably lag behind, both in terms of technological innovations as well as gaining digital marketing ground. So to that bit, again, I think it was mandated. Whether it will reap fruits over the next few quarters, I think it is a thing to be seen from numbers. But the management in the results gone by also had alluded to the fact that they will keep on continuing investments in different subsets of their business and probably get these businesses to maturity. So I think one aspect is the earnings profile, which should grow for their core businesses. The other angle is continued investments over the next few quarters in these different sub-segments. But over a longer period of time, I think it will yield results because I think the balance sheet dynamics are very, very strong. One can argue about valuations, but investors who are holding the stock can probably hold them.
Mayuresh, a couple of stocks which cracked big time yesterday. One of them was KRBF, the other one was Tata Motors. Chalk and cheese, I know, but if you track both, then both. If you don't track both, then whichever one you track.
So KRBL is not something that we track, Neeraj.
Okay.
But a large element in terms of the investments that Tata Motors is expected to do over the next 3 years. So 1,20,000 odd crores. I think the street is a little bit skeptical in terms of the capex that they have announced. The other element that will obviously start coming through in terms of this huge capex will be the interest and depreciation expenses, which will also probably eat into the bottom line of the company. The other angle probably also is the slower growth trajectory that one probably is expecting from JLR. So what the management has said in terms of the gradual volume growth, specifically through new launches that it probably expects to do, I think that is an encouraging sign. But what has probably happened in terms of competition, and again valuations, when you're probably talking in terms of competition along with the huge capex that they're expected to do, I think that is something which is probably creating some amount of nervousness in terms of how the performance of the stock will be. The third element obviously is the tariff imposition. So what probably happens in key markets like North America, and even the Brexit issue at hand, what probably happens with the European volume sales is something to be noted. I think the Chinese JV is holding up pretty well. The Indian operations probably are holding up pretty well as well, both on the CV side and the PV side. But I think JLR is something that does the a bit talking for Tata Motors of sorts. So to that bit, I think the apprehensions are something that probably are well laid out in terms of what they had presented. Valuations might be attractive at this point of time, not just for Tata Motors, but also for its DVR. But I think it's the numbers which will do the talking. So let's wait for the quarter results to come.
Okay, Mayuresh, just hold on. A new IPO that will open today. Auto ancillary maker Varroc Engineering is headed to the primary markets today. The company looks to raise close to 2,000 crores through its initial public offer. The issue will also provide an exit to the Tatas, and that too at a significant markup to their initial investment. Samit Sarkar is standing by with all you need to know about Varroc and the IPO that is there. That starts today. Samit.
So Varroc Engineering is looking to raise close to 1,950 crore rupees at a price band of 965 to 967, and at the upper end of the price band, that is 967, the company will be valued at close to 13,000 crore rupees. Now if you see, the offer is a complete offer for sale where the promoter and the Tata Sons investment arm, that is Omega and Tata Capital, will be selling their shares to the investors. Now, the Tata Group companies are making nearly 6 times their investment in the company. Now on an average, their investment cost in the company was close to 162.43 rupees per share, and now they are selling their shares at 967 rupees. So that's nearly 6 times gain on their investment. Now if you see, Varroc Engineering is designs and manufactures exterior lighting, plastic and polymer components, and electronic and metallic components. Now mainly it is an exterior lighting business. Now if you see the revenue structure of the company, it gets nearly 60% of its revenue from the lighting business, while the remaining 40% comes from polymer, electrical and metallic components. And if you see, the company has nearly 36 manufacturing facilities, of which 26 are present in India, while the remaining 10 in 6 different countries. Now the capacity utilization of these 10 plants in the foreign countries is close to 80%, while that of the 26 Indian plants is close to 70% for the financial year 2018. Now if you see, the company generates nearly 65% of its revenue from the global markets like Europe, North America, and some of it comes from the Asia Pacific region, while the remaining 35% comes from India. Now in the Indian market, they serve mainly to the 2-wheeler and the 3-wheeler auto manufacturers. Now Bajaj Auto is their major client, as it contributes nearly 19% to the top line of the company, while the top 5 clients contribute nearly 60% to the revenue of the company for the financial year 2018.
Okay, and Samit, a word on the financials. How do they stack up against peers, and any of the brokerages that have given a recommendation on this IPO?
If you see, for Varroc Engineering, they do not have an exact peer because of their diversified product portfolio and a significant exposure to the foreign market. But we have tried to compare it with Lumax Industries, Minda Industries, and Motherson Sumi. Now, Lumax Industries is into the manufacturing lighting component, but it serves the domestic market. Minda Industries has a diversified product portfolio and is the nearest peer when compared to market capitalization, while Motherson Sumi is a big player with a diversified product portfolio but has a significant exposure to the foreign market. Now, if you see the growth ratios on the financial side, the Varroc's growth ratios were better than that of Lumax and Motherson, but it lagged when compared to Minda Industries. Now, if you see the revenue and EBITDA of the company, it grew at a compounded annual growth rate of 20% and 28% over FY13 to FY18. However, we do not have the growth rate of profit because in FY18 the company had made a loss, but from FY14 itself the company was profitable. On the balance sheet side, if you see, the company's total debt to equity is at par with its peers. It is as low as 0.3 times, while the book value per share is higher than Minda Industries and Motherson. So for FY18 it started around 211 rupees per share. On the return ratio side, now the return ratios are a bit subdued when compared to peers, but when you compare it with financial year 2017, all the three return ratios have expanded. For FY18, Varroc's return on equity was 16%, return on capital employed was 14.6%, and return on asset was close to 7.1%. On the valuation side, the valuations are largely reasonable and balanced out when you compare it with its peers. For FY18, Varroc's price to earnings was 30 times, market cap to sales was 1.3 times, EV to EBITDA was 15.6 times, while price to book was 4.6 times. Lastly, on the brokerage side, now it's a mixed view, with two of them having a subscribe recommendation, while Angel Broking have a neutral recommendation on this IPO. Now, these two have a subscribe recommendation on the back of reasonable valuation, decent return ratios and balance sheet, and the strong growth opportunities that Varroc has, while Angel Broking has a neutral rating because of a low top line and bottom line growth over FY16 to FY17 and its exposure to the two-wheeler and the three-wheeler market in India, which according to Angel Broking is in a slow growth phase.
Thanks for that, Somit. So Mayuresh, if you guys are not recommending a subscribe on Varroc, are there better opportunities in the auto ancillary space that you believe people can make an investment in?
No, so Neeraj, I think to a large element, if you probably are looking at Varroc and its competitors at this point of time, and I totally subscribe, I think there is no direct peer comparison. But I think the LED lighting space is looking very, very interesting at this point of time. As more and more mandatory checks start happening, both in terms of day learning rights as well as LEDs, though a tad bit expensive at this point of time in terms of a buyer perspective, I think it's going to be of key importance to a lot of players who are probably catering to that. So you've probably got a few players like Lumax, you've got FIAM Industries, which probably supplies these components to the two-wheeler space, to the four-wheeler space. But again, the substantial order flows will start coming through over the next few quarters. A few of the models, specifically I think the model that Honda had incorporated, a model of Hero MotoCorp, have probably incorporated these systems into their product suite, and a large element in terms of Maruti Suzuki on the four-wheeler side, specifically with Swift, has probably incorporated this as well. So I think as this gains more and more traction, my own sense is that the earnings growth can be in excess of higher double digits, which can support the earnings profile for companies like Lumax Industries or FIAM Industries. At the same time, I think Minda is something that I've liked in the past. You can probably argue that Minda has a more diversified portfolio, but I think it probably also insulates it from risks related to a single or a couple of product profile. So largely, I think these 2-3 auto ancillaries also look very, very interesting from a long-term perspective.
Okay. Stay on, Mayuresh. So much more to talk about. It's time to get in our technical experts on board. 8:45, in fact 8:47. Hadrien Mendonca, Senior Technical Analyst at IIFL, with us on the show, as is Thakkar, Assistant Vice President for Equity Research at Anand, Rathi. Gentlemen, both of you, very good morning. Many thanks for joining in. Hadrien, likely to start off slightly lower today. What would your positioning be until this expiry? What's the trading strategy on either the Nifty or the Nifty Bank today?
Yeah, good morning, Neeraj. So actually nothing has changed, greatly from the time I was here in the previous week. And Nifty continues to consolidate between the 10,700 and 10,850 zone. I would continue to be of the view that, I would remain cautious. There is only one thing that could actually, tempt me to turn completely bullish. That is a break only above 10,930 levels. Till I would continue to remain cautious. On the downside, 10,700 is something that I would be watching out for, because if we see a break below the 10,700, I think things can get a little more worse for the overall structure that Nifty is trading in. As far as the Bank Nifty is concerned, it is interestingly formed an inside bar. Now, if you look back how the inside bar has actually traded in the past, 3 to 4 months. So, if we see since Bank Nifty hitting its all-time high, there were 3 such occasions where we've observed an inside bar. And every time we saw that occurrence, we saw a series of down days that were followed. So if this inside bar is also going to, unfold the way it has in the previous 3 occasions, I think, we may see, a series of down days going forward. Having said that, the resilience that we're seeing is, completely different of what is happening all around. So I think we have to wait and see whether the down days series that I'm talking about may unfold or not.
Okay, and Jay, good morning. What are you looking at as far as the benchmark indices are concerned? Anything interesting there?
Hi, good morning. As far as the Nifty is concerned, it still continues to trade within that range of 10,900, 930 on the upside to 10,650 to 550 on the lower side. Now, this range is maintained now for the most of the June, and I would say that whether it would continue towards the expiry or not, I think yes, the probability is quite high because we have been seeing good amount of writing happening at both on the call as well as the put front. But then, one thing which is quite, I would say alarming for the bulls is that the indicators have gone into the sell mode from the buy mode. That is something negative. And another thing which we have been seeing is that the global markets are now started to correct, which was slowly and steadily moving higher, especially the US. Now, in the last trading session, that is yesterday, we saw US breaking from its rising wedge pattern, and this clearly indicates that the S&P 500 is heading towards the levels of 2610, which is approximately 4% from the current levels. So if S&P falls 4% from current levels, will Nifty be able to withstand those global cues? I don't think so. I think that that would in fact add on pressure to the Asian indices as well, and Nifty will not be spared. And on the lower side, we will see the lower end of the range, I would say rather, the lower end of the range getting retested. That would be 10,650 to 10,550. I think that's quite possible. Only if 10,930, like Hadrien said, if those levels get taken off, then I think we can see further upside. Now, as far as the Bank Nifty is concerned, that's been trading within the range of 26,300 to 26,800. Right. That's 500 points range. And I think that wherever this range gets broken, we would see further move. Till then, we can see further consolidation. But then I would again say that the bears have an upper hand. Till 26,800 levels are not taken off, do not go aggressively long on Bank Nifty as well.
Okay, thanks, Jaman. Stay on. Let's get in our special segment, Bloomberg Edge, wherein Jayesh Kinlani tells us about a pattern that is formed on the stock. Jayesh, what is the terminal telling you today?
Morning, Neeraj. The stock on the radar is Sun TV. That is because the RSI has now become oversold, and at a very critical level. In the last 6 months, the stock was at a similar level, and from there on, it has bounced back. So there is significant, belief that there could be a buy signal going ahead. Now, first, let's have a look at how the RSI works. It's a momentum indicator which shows you the relationship between the price moves, and it also helps you to measure or identify where the overbought and oversold levels are. Let's have a look at those levels as well. Overbought is when the RSI is above 70, and oversold is when the RSI is below 30. How do you get your buy and sell signals? You buy when the RSI crosses 30 from below, and you sell when the RSI crosses 70 from above. With that theory in place, let's have a look at the chart of Sun TV. So that's the last 6-month chart that I was referring to, and you can see that somewhere in the month of March, the stock had touched about similar levels where it is currently at about 800, and from there it actually bounced back. Today also we are, or with yesterday's close, we are very close to this particular level, and with that the RSI, which is the bottom panel, has become in fact oversold. Now this is still at the level of about 27, so you have to wait till it crosses from below to above the green line. If we can zoom into that, you'll be able to see that it's below, but you'll have to wait for a buy confirmation, wherein this white line crosses back above the green line. That's where you'll get your buy signal.
Okay, we'll watch out for Sun TV in trade today. But in news that came out, insurance portal PolicyBazaar has raised over $200 million through a fresh round of investment led by Japan's SoftBank Vision Fund. The investment round also allows participation from existing investors. To discuss more, we are joined by Chintan Thakkar, CFO of InfoEdge, who joins us on the phone line from Delhi. Good morning, Chintan. First of all, give us more details. What's the rationale of investing more in PolicyBazaar, and what is your plan going ahead in this one?
I think in the last 2 years, if you see, PolicyBazaar has been performing very well. They have been doubling their business, and we do believe that this kind of trend will continue. So we are very optimistic about PolicyBazaar as well as PaisaBazaar. Both the portals seem to be growing rapidly, and that's very exciting for us. But more than that, it's also about getting marquee investors to back this company. We are founding investor in PolicyBazaar. We were the first investor when the company started in 2008. So we are always happy to see whatever we can do to ensure that we kind of onboard such investors like SoftBank. Earlier we kind of tried to get Temasek also in. So to get support from this kind of investor, I think that kind of makes company very strong, and we are very excited about that.
Chintan, what's the cash on the books that you're having? How much cash will be deployed here? And give us more details on the financials of PolicyBazaar.
So, talking about our cash, we have more than 1,800 crores on our balance sheet, and we would be roughly investing, it's a 350 in this transaction. And so we still have a large amount of cash lying on our balance sheet. From the financials of PolicyBazaar, they are not yet audited for last financial year, but their top line has grown more than 80%, and they have kind of more than 300 crore now. PolicyBazaar has been kind of generating positive EBITDA, and there is a little bit growth capital that would be still required for PaisaBazaar.
And Chintan, are there any other such subsidiaries that you're looking to up your stake in the near term?
Well, we are always open for any opportunities, whether it's in the existing portfolio companies or also if we get a chance to invest in any other exciting startup. We have about 15 live investment as on this date. 2 or 3 are most talked about. The others are still in a very small and nascent stage. I'm sure that they would require more growth capital, and we would be happy to put our muscles behind them.
And my final question before we let you go, Chintan, is how will the shareholding of PolicyBazaar change post your investment now?
So we would be, after this investment, we would be effectively, speaking, we would be holding about 13.5%. And about 200 million has been raised, and the post-money valuation is about $1 billion.
Okay, Chintan, we'll leave it at that. Many thanks for joining in today and giving us that perspective. Really appreciate. Before we take in stock ideas, just want to mark, there are a bunch of questions that have come in on our social media timeline, and we'll take all of those. Just want to mark, Nishad has this query on lead metal-based stocks, Spondioxides, Nile and Gravita. We'll ask about that as well. There is a question that has come in on CET, some questions on cement stocks, as well as Motherson Sumi. We'll ask about all of these questions to our guests in just moments from now. However, what we haven't done is take the questions from our technical experts, the stock picks from our technical experts. Hadrien, to you first, your stock recommendations for the day.
Yeah, so both are a sell recommendations. The first one that we are bearish on is Bank of India June futures. I think the stock is on the verge of a double bottom kind of a breakdown already on the daily charts. And I think one can consider short selling Bank India June futures for a target of 89, place stop loss at 93.5. The second stock that we are bearish on is Motherson Sumi. We've already seen a breakdown from a head and shoulders pattern, which is not a good sign on the daily charts. I think the momentum on the downside will continue. One can short sell Motherson June futures for a target of 281, keep a stop loss at 291.5.
What about you, Jay?
Well, I have 3 sell recommendations. The first one is a sell on Balrampur Chini. The stock has clearly broken down from a symmetrical triangle pattern on the lower side that was formed in its wave 4. The indicators are in the sell mode, so one can sell Balrampur Chini targeting 62.50 with a stop loss of 67.20. The second sell recommendation is on LIC Housing Finance, which has broken down from a rising wedge pattern with a sell crossover in its indicators. This is a bearish reversal pattern, so one can sell LIC Housing Finance for a target of 478 with a stop loss of 501. And a final buy sell recommendation is on Mothers and Sumi, which has clearly broken down from a bearish head and shoulders pattern with a clear sell crossover in its daily as well as the weekly indicators. So one can sell Mothers and Sumi targeting 279 with a stop loss of 293.
Okay, minute and a quarter left for the markets to start, and we'll discuss some of the other stocks as well. Just a quick thought, Mayuresh out here, 30 seconds if you can. A lot of queries on Mothers and Sumi after the fall that we've seen. Any thoughts here? Can somebody accumulate it?
No, so I think if it corrects further, I think it's still a qualitative franchise. Its European order book still looks very solid. What you probably heard in terms of the current news flows related to Audi and the related issues surrounding that, I think that does create apprehensions along with what happens in terms of US tariff impositions. But a large element is that valuations, if it corrects further from the current level, would look very, very attractive.
Okay, 38 seconds to go. Gentlemen, stay on. So much more to talk about. We will address some of the other queries as well, some key stocks in news as well.
Yes, I think we should just address the Aurobindo Pharma final nod for ertapenem injection. One of the most awaited drugs from Aurobindo Pharma. The approval has come in. I think there were some issues regarding the plant, and that has been solved. And this could be a near-term catalyst for Aurobindo Pharma. What they've said is that let me see if I can find it. The market size is at $387 million. It's a niche drug for them, high margin drug. So that's something that we will watch out for. I'll try to get more details on what this is, but definitely positive news for Aurobindo Pharma.
Well, let's find out if it's reacting or not, Darshan.
Yeah, Mayuresh,
can we actually just first see if the stock is reacting and mark the pre-open rates? So Aurobindo, okay, not quite there, but as Darshan said, let's wait for the pre-open rates to settle down and then see what happens to Aurobindo. The markets, meanwhile, have started off on a flattish note. The Sensex and the Nifty not quite showing the pain that the SGX Nifty or the Asian markets were suggesting, but let's wait and watch. ICICI Bank should come up on your screen. That's the big one. And after the 3.5% gash yesterday, another 1.5% done for ICICI Bank in the session today. 2.5% now in counting. Let's wait and watch what happens to ICICI Bank. The OMCs were correcting thick and fast in trade yesterday. BP, HP, IOC. Let's see if there's further pain. And Tata Motors and KRBL, two stocks which were amongst the top losers in the large cap and the broader end of the spectrum. Bring up both of them. For now, KRBL and change. Tata Motors after 6% slam dunk, finding some semblance of sanity right now. Let's wait and watch though if that lasts or no. Just want to mark before I hand it over to Darshan on all stocks. The rupee, which corrected about 30 or 40 paise yesterday. 68.13 was the close in trade yesterday. Let's see how it started off in today's session. The Indian rupee and the bond yield should come up on your screen. Rupee 68.18, so the pain continues. We're back to those 68.20 levels and about 60 paise away from all-time lows. And the bond yields, let's see where they are, 7.82, so that's steady as she goes. Darshan, what are you spotting?
So among the mid caps today, Hexaware is trading up 8% is what I can see. Avanti Feeds goes X bonus today, so let's see what Avanti Feeds is doing in trade today. It's a 5% push going X bonus. Shoppers Stop is up 3%. Surprisingly, the management has been meeting a lot of funds over the past few days, talking about premiumization, increasing their brand label. So positive comments coming in from Shoppers Stop. So that's what they're talking about. InfoHedge has reacted positively to the news that has come out in terms of the PolicyBazaar stake. I can also see counters like Hexaware, which is up 5% in trade. I want to pull up PNB Housing Finance. Let's see how that one has moved post the big reaction that's come in. It's still going up. It's up 1, 2, 3, 5. And I want to pull up, let's pull up Aurobindo Pharma to get a sense of, whether the traction is on the positive side. Yes, 2%. Probably could go even much higher. It's an extremely positive news that's coming in. Reddington is showing an uptick in trade today. Pull up Reddington, pull up Container Corp. So Reddington is up 7%. Container Corp because of the it's an aberration because of the bonus. It goes X bonus, so that's why this 50% move is being seen. While Suven Life is down 3%, so that's what I can notice as of now, Neeraj.
Well, interesting names there to watch out for. Let's first get in Somit, then Darshan will probably give us more details about Aurobindo as well, maybe get in a view from Mayuresh. But Somit, what are the big brokerage calls for the day today?
On the big brokerage calls today, first we have is Kotak Asset Management Company on KRBL. Now they came out with this note addressing the investor concerns over the company. Now in this note it says that the management has clarified that Gautam Kethan was an independent director with no executive or management position. The company also never had any financial dealings with him. On Omar Balsharaf, the company said that he is a distributor of KRBL in the UAE region, and so far KRBL has done a business of close to $4 billion with Omar Balsharaf, and all the transactions were through banking channels, and also the company has never taken any loan from Omar Balsharaf. Now the Kotak Asset Management believes that the business of KRBL remains robust, and these news will not have any impact on the financials of the company. Now they're expecting the business to deliver a strong 21% EPS growth over the next 2 years, and it also says that the fundamentals of the company are strong and it trades as a 60% discount to the FMCG peer players. Second, we have a CLSA on Phoenix Mills. Now the brokerage has maintained its buy rating on the stock but has raised the target price to 771 from 757. The company has announced 4 new mall projects in the last 10 months, and these project acquisition spree will double the lease income for Phoenix Mill according to the brokerage. The current properties along with the new office developments in the existing sites should drive the company's lease income growth at around 12% CAGR over FY18 to FY24. The brokerage also says that the company is well funded for growth, with private equity joint venture likely to do all the expenses going forward.
Okay. Okay, let's talk about Aurobindo Pharma, and the counter is reacting positively. Mayuresh, any view on Aurobindo Pharma? They've got the much awaited approval for ertapenem generic. How does that bode for the company?
So this is positive news, and again I think if you look at their product suite, again injectables is something that the management is highly focused about on 2 counts. A, I think it's a high margin business, and B, I think the opportunity itself within injectables is so large that if Aurobindo probably gets a slice of this market, I think it definitely contributes significantly to its top line. Now for the core business, I think what you've probably seen over the past few quarters, it is slowing down. So I think one must estimate that numbers for FY19 largely should be probably on the softer side, and again on the margins front overall should be a little bit range bound or a constrained kind of a move. But a large element in terms of the pipeline that they've got definitely holds it in good stead. So both from an earnings profile and even from an EPS perspective for FY20, the stock from a near-term perspective looks fairly valued. But I think the long-term growth prospects still remain extremely positive for Aurobindo. So the whole recommendation probably still continues.
Mayuresh, couple of quick responses. I'm trying to play a bit of a rapid fire here because a bunch of queries from our viewers. Do you cover the lead metal based stocks? I mean, the likes of Gravita, Pondy Oxides, Nila, etc. Any thoughts here?
No, I don't cover that.
You don't cover them. Never mind. Somebody's asking about whether RBL Bank is a better pick over Kotak Bank, or is it the other way around? It's an interesting question. Chalk and cheese, both the banks in terms of size as well. But what would you recommend if you had to buy one over the other?
So Kotak, well-established player, Neeraj. I think what they're probably doing in terms of their business model, in terms of their advances growth, their capital adequacy, what they've probably done, both in terms of giving share value, their due returns. I think it's a well-gestated fact. For RBL Bank, I think it's a new kid on the block, but what they've probably done in terms of CASA ratios, they have been improving. Currently stands around 24.3%. Their advances growth have been stupendous. So if you look at their top line growth, because of advances which have grown in excess of 50-odd%, the NII growth has been stellar on that count. If you're probably looking about GNPAs as well, if you leave aside the agricultural component, which probably has a higher component of GNPAs, the overall GNPAs probably still look pretty reasonable in my opinion. And even if they're able to grow at 30-35-odd% with sufficient capital adequacy, I think from a medium-term perspective, if the investor probably has that viewpoint, RBL Bank can have a stupendous amount of growth. And valuations, obviously, as you rightly pointed out, cannot be compared because of the sheer size. I think the long-term dynamics still stick with Kotak Bank. How RBL will be able to perform quarter after quarter over the next few years is something to be seen. From a medium-term perspective, RBL can outperform Kotak in my opinion.
Okay. Some other queries and Hadrien, Mendonca, as I look at the pre-open rates and the way they are settling down, the one that is under pressure is BPCL. After cuts yesterday, the OMCs are starting off slightly weak today as well. If somebody has a short position, would you advise riding the short position?
Yeah, one should definitely ride the short positions. I mean, you should never go against the momentum, and the momentum currently is on a downside. In fact, it is also breaking down below its 21-day moving average that was, proving to be a very strong support in the previous 2 weeks. But, breaking below 21-day for the first time in 2 weeks is something that is not a good sign. So, one should definitely hold on to your short positions.
Okay.
Okay, let's talk about some of the other stocks that are moving in trade, and we'll try to get the oil marketing companies look rather weak. Hadrien, anything on the oil marketing companies?
Yeah, so BPCL, we just spoke about, one can consider BPCL as an option wherein one can short sell. In fact, a lot of people, according to what the questions were, are seeing, selling pressure in BPCL. So I think one should continue to, remain short in the BPCL.
Jay Thakkar, what about HCL Info? Do you track that on the charts? Has corrected again today, down about 3%, trading close to 52-week lows. Any thoughts here?
Absolutely. HCL Infosys has clearly broken down from a symmetrical triangular pattern, I would say, that's been formed on the weekly basis. And I would say this stock has been trading within this range of, and it's been consolidating since past 10 years now, and now it's heading back to the lower end of the range, and this should be the final leg of the downside. But then I think, it's still quite much left on the low side. 24, 25 is where the stock will basically pause and might form a bottom. But we will see the levels of around 24 to 25 coming in HCL going forward.
Okay, that's the view on HCL Infosystems. We're just minutes away from the market opening, and we'll tell you all that you need to know to stay ahead in today's trade. Wait another day to analyze Fortis Healthcare Q4 financial. The board is set to meet again today as the annual accounts require further deliberation.
SoftBank has opened its wallet for PolicyBazaar.com, making the online portal India's newest unicorn. InfoEdge and SoftBank will jointly invest $45 million each for the 8.93% stake. Morgan Stanley sees this as a positive. The stock starts off about 1% higher.
Promoter holding at Tube Investments is set to go down by 0.6% as Inam Securities has bought in stake from the promoter's investment arm. The counter is up almost 1%.
Update for you from the F&O space. Wockhardt is the latest entrant in the F&O ban list.
And if you want a share of Varroc Engineering, today is the day you put your name on the list. The auto component maker will open subscription to its IPO today at an issue price of $956 to $967 per share.
And here are some key brokerage calls for you. CLSA goes bullish on Ultratech, hiking its price target to 5,000 rupees per share. And the rationale behind the call, it has been a significant year due to acquisition and integration of JP Associate units. Well, Mayuresh, Joshi, if somebody wants to bet, is cement a good space to bet on right now? Because stocks are trading at 52-week lows. And if so, which cement maker do you like?
Being selective, Neeraj, again, if you look at the South-based cement companies, they've greatly struggled in terms of sand mining issues, what has probably happened with input costs, both coking coal, iron ore. You're probably also talking about freight expenses taking and eating into their EBITDA margins. The second element in terms of how the pricing will hold up, specifically for key markets, you have seen mixed reports actually come through in terms of pricing trends. But I think the pricing trends should improve over the next couple of quarters. The third element itself is the kind of capacity additions that a few players are probably doing. But again, I think if you're probably talking about utilization levels around 70% for the industry as a whole, those levels should start improving as the focus of this government, both in terms of rural and urban housing along with infrastructure, probably still at the forefront. The fourth element obviously is the dynamics in terms of the EBITDA per ton and whether they'll be able to have the push through done for the cost inflation that we've probably seen. You might be able to witness that in terms of a few price hikes for a few key markets like North, selective areas in East, and a few pockets in the West. So again, from a valuation perspective, you're probably going to look at these stocks from a bottom-up approach. We probably like JK Lakshmi Cement in terms of their capacity addition that they've done, in terms of expectations of volume growth of 10 to 12% over the next few quarters. And again, I think the cost optimization at its Durg plant, with a captive power plant, the conveyor belt should probably have a say in terms of EBITDA per ton. So I think on an EV to ton basis, also one of the cheapest in the mid-cap cement universe. So JK Lakshmi probably remains a top draw. Within the large cap names, again, I think Ultratech is something we'll continue to prefer, both in terms of the sheer capacities that they've got and the sweating of JP assets in our opinion as well. I think they've been doing that pretty well. So again, I think pricing discipline should come back to the industry, and valuations though on the higher side, I think should probably still support Ultratech in terms of premium valuation for the markets that they cater to.
Many thanks, Mayuresh, for joining us and speaking to us on Bloomberg Quint today.
Thank you so much.
Okay, a minute to go for the markets to open. We'll take the top picks from a technical analyst. Jay, you go first. Very quickly, what are you recommending? Anything interesting that you're looking?
Well, of all those, which I have recommended, Motherson Sumi, according to me, is the top sell because it has clearly broken down from a bearish head and shoulders pattern on the weekly charts as well. So sell Motherson Sumi for a short-term target of 279. Positionally, one can carry this towards the levels of 260 as well.
Okay, and apart from it, Hadrien, what is your top pick for today?
Yeah, so Tata Chemicals is also looking weak, and we are seeing a distribution, pattern, and also, on the verge of a breakdown from that distribution pattern. I think Tata Chemicals is all set to move lower towards its long-term 200-day moving average support of close to 700 rupees.
Okay, Hadrien, as well as Jay Thakkar, gentlemen, many thanks for joining in today and giving us your thoughts. Here's the market open for our viewers. About 0.4% for the Nifty Bank, 0.25% for the Nifty and the Sensex. So starting off on a slightly tepid note, the mid caps and the small caps, two should come up on your screen. Remember, yesterday there were deep gashes out there, as would be expected compared to the large caps. Starting off about 1/3% the mid cap space. The small caps typically tend to start off flattish and then tend to get an exaggerated reaction during the course of the day. What's the heat map showing? Well, a fair bit of red. Bharti Infra is the top loser. ICICI Bank succumbing to some bit of selling pressure in today's session too. OMCs and Tata Motors continue to grind lower. So yesterday's losers are well and truly today's losers as well. We don't have Aurobindo. Forget Aurobindo. We don't have any of the other pharma names save for Lupin, which is trading well and truly in the green, about 1% higher. Axis Bank, Ultratech are amongst the stocks which are trading well, but hardly any movement on the gainers side. And on the losing end, ICICI Bank remains the top draw, down about 1.5%. So after the 3.5% gash yesterday, another 1.5%. It's something that we'll talk about to our next guest with as well. Talk with Chakri Lokapriya about ICICI Bank. However, since it's flattish for the markets, let's focus on for the Nifty. Let's focus on the broader end of the spectrum and try and see what's happening to some of yesterday's top losers. The PSU banking stocks, which are down and out in trade yesterday, they're starting off on a flattish note. Though today's session, I must admit, Allahabad Bank, be it Union Bank or Canara Bank, they are all starting off on a flattish note in trade today. What else? Stocks which are trading close to 52-week lows. Aditya Birla Capital, Motherson Sumi, NBCC, and the pain continues on Motherson Sumi individually. That's that one stock that comes up in the attention span of almost everybody, but it continues to grind lower, down another 1.25%. Well, trade war fears would impact something like a Motherson Sumi for sure, at least sentimentally, if not in business. At some point of time, we'll talk to Chand Sehgal about this. So this is one more stock in focus. Last but not the least, KRBL. After that slam dunk yesterday, it continues to grind lower. So 20% down yesterday, another 6% down today. This one is not having a good day at all. Even if the earnings don't really collapse and it comes out clear, the P multiple will be a bit circumspect here on going ahead. But Darshan, what are you spotting?
So Avanti Feed post the split today is up almost 11% is what I can see right now. So that's the top gainer among the mid caps. Info Edge, because of the investment it did in PolicyBazaar, is up 4%. KEC International has moved up 2%. Aurobindo's out of the Nifty now, and it's up almost 1.5% now, so that's doing well. Cement Pack continues its good run. India Cements is up over 1% in trade. So these are among the big movers that are there. KRBL 5% down, so that's down in trade. Voltas is down almost 4%. And after massive move yesterday, PNB Housing Finance is down 3% in trade. Some of the other counters I want to focus: Bajaj Finance, fresh 52-week high, above the 2400 level. So that is something that I'm seeing. Motherson Sumi at a fresh 52-week low. Syntex Plastics at a fresh 52-week low, so that is not doing well. Among the companies that are doing well, Abbott is at a fresh 52-week high, so that is doing extremely well for itself. UPL continues to grind down. UPL is at a fresh 52-week low. Some of the marquee names are down, like Motherson Sumi, UPL at a fresh 52-week low. Let me spot if I can find some other company. Tata Elxsi at a fresh 52-week high. So these counters continue to trade. Tata companies will be in focus ahead of the all-important meet that is there in terms of the Tata Group and what the vision is for the next 5 years. So that will be important to watch out for. Recently listed Indostar Capital is trading lower. Brigade is at a fresh 52-week low. So the list of companies on a fresh 52 low is continuing. You have some of the other counters. If I spotted right, JK Lakshmi Cement is doing well in today's trade, and you have RBL Bank, which continues to do well in today's trade. So that's about it. Again, about the 560 mark, and just look at Bajaj Finance go. Neeraj.
Well, if Darshan is saying go, I'm guessing it's going on the upside, because that's what it's been doing for the last few days, weeks, months. 2404 and counting, another 0.5%. The index has recovered quite a bit of lost ground, must say. Let's get in Chakri Lokapriya. On that note, he's managing director at TCG Asset Management. Joins us right now on the show. Chakri, good having you. Thanks for joining in. Chakri, I remember our budget discussion, and I'm not pointing out that people were wrong, but I remember post-budget when we were talking about the corrections that started coming in Feb and March. Most people were of the opinion that a lot of good quality stocks have corrected. It might be a good time to buy them. Probably was as well if you look at the growth prospects, but the corrections have only deepened since then. Have you put in more money to work, or right now you're sitting on the sidelines because of all that's happening around the world, not just in India?
At the time of the budget, the concerns were that it was just India. Now, post that, of course, trade wars have started, and also alongside, Indian demand has not picked up. If you looked at the corporate earnings contribution towards tax collections has fallen short. If you look, GST collections are likely to fall short. Current account deficit has widened way remarkably higher than earlier estimates. So against this backdrop, your rupee has fallen. It's hurt various industries. So from this level, I think some of the correction is overdone in some pockets. For instance, if you look at construction companies, they're all down between 20-25%. More, they're trading at about 10 times PE. For a very strong earnings growth still for the next visible earnings growth for the next 12 months to 12 to 24 months. On the other hand, metals, they are impacted because of trade wars, etc. But again, they've also corrected. So yes, there are pockets of growth, and we're putting to money work there.
What about some of the metal counters? What do you make of it? Globally, yesterday we saw most of the global metal counters were down in trade. Again, the trade war impact, and some of the valuations have come in attractive range. Would you venture out into the metal space, or you believe that it's more of a cyclical industry and it's peaked out?
Metal stocks have corrected, and cyclically they have. It's unlikely that they have peaked out. There's still more growth to come. Okay. And because US is strong, Europe is just recovering. The new uncertainty is whether the trade war becomes a real trade war. It's not a trade war yet. And so against this backdrop, stocks have corrected 50-20%. They're down in single-digit multiples. And if you look at selective companies, for example, Jindal Steel and Power is largely domestic steel consumption, meetings, and therefore power demand. And also, so that company is corrected a lot. The Tata Steel has corrected, way to Hindalco has corrected. So these stocks, which are large, liquid, and are available at attractive valuations, is where to go, I think.
What about Tata Steel in particular? Let's say this entire thing with ThyssenKrupp fails to take off because there are a lot of concern. It can go, it can't go. Then what happens to Tata Steel? Is that a big risk that they're running, because they've already acquired Bhushan now? And the debt that they wanted to transfer to the JV, that will not happen. Will that be a big problem for Tata Steel?
It's unlikely, because Tata Steel has, gone through these acquisition cycles several times in the past. And so you have to give a benefit of doubt that, they would be able to successfully integrate as well as pare down debt. And also, if you look at capacity utilizations for steel, are running at fairly high levels, demand is strong, and therefore the pricing, irrespective of trade wars, is likely to be strong for the next couple of years. So that has been factored into the paying down of the Bhushan Steel debt. So from that perspective, Tata Steel looks good post what's corrected recently.
Interesting. What have you made of this whole saga on ICICI Bank? Now, of course, there is new developments that have come out yesterday as well. The news flow will just continue to come on, Chakri, on this one. What does somebody who likes the valuations do? Bide his time or take a plunge?
Indeed, the news flow is unfortunately likely to continue. And unfortunately, I think it's time to start dipping in and buy ICICI Bank. This is a large bank which has both retail and corporate presence. Management issues are now well known, and now the latest SEBI one is expanding the so-called investigation into dozens of companies into which. Now this kind of a thing is not good for the economy, is not good for the banking sector in general, which I'm sure at some point will, because the bank in itself, the ICICI Bank, its board, has been fairly open in terms of that they're ordering one probe after the other, internal investigations. But yes, news flow is going to be this, but I would selectively start adding it in tranches because it does offer value at current prices.
Interesting. Have you looked at the business of KRBL? Have you looked at all that's happening in the recent past?
No, fortunately, I've stayed away from the stock and I don't know much about it.
You don't know much about it. No mind. What about the globally impacted stocks, Motherson Sumi, for example? I mean, what's ailing this one?
Well, Motherson Sumi is clearly the potential of trade wars impacting in it. They have significant presence with all the major European manufacturers, and now if it's going to lead to some amount of business disruption for its to whom it supplies to, for example, Harley Davidson is not, of course, a supplier, but is moving factories to Europe. So some of the car manufacturer guys would also do so to the US. So again, I think this trend until it settles down, but I think it does offer, beginning to offer a fairly, you can start nibble at the stock.
What about, just look at Kajaria Ceramics, it's at a fresh 52-week low, Union Bank, Bank of India. PSU banks, are they value propositions, or are they, would you totally avoid them at this point of time?
The smaller PSU banks, I would avoid them at current point because it was expected that there would be capital infusion, there would be QIPs, etc., which has not happened at the pace at which it was supposed to have happened. And so against this backdrop, the large PSU banks, still SBI offers tremendous value. I think that's the way I would approach PSU banks.
What about, counters like Bajaj Finance? It's moved up, Bajaj, Finserv, both of them are trading at record highs. Their market cap together is more than all the PSU put together except for an SBI, and they themselves have a market cap in excess of SBI. If someone is looking to take positions into Bajaj Finance or Bajaj Finserv, would you be concerned on the valuation of these two companies, or do you believe that if someone wants to take a position, there is still enough potential for these counters to perform?
Both of them extremely well-run companies, and then the new mantra for everyone, private, public, and NBFCs is retail, and they do that. And that still, the loan book is still clean, but valuations are reaching up there. Given that it's a large, weights in an index, it will attract a certain amount of passive flow. And so that's likely to continue for those stocks. But for active managers, I think the valuations are getting there for in terms of incremental returns.
So what would you do? I mean, would you consider a switch out of a Bajaj Finance into something that is better value?
I would continue holding. Because there's a certain amount of passive inflow that stocks will continue to see.
And the growth in the management.
Exactly. So for these reasons, I would continue to hold them, but maybe not make fresh buys.
Okay, let me ask you, these brokerage stroke diversified financial services names, they are chalk and cheese right now, right? The IIFL and Edelweiss have continued to stay rock solid. Motilal has been hammered out of shape, trading at close to 52-week lows. The other smaller ones like MK and JM2, not quite up there. Do you look at this space actively as an investment candidate space? And if so, would you be scouting something out here?
Yeah, well, India Infoline has now become a slightly different animal. In addition to brokerage, they have wealth and other businesses. and so does Edelweiss. Whereas the smaller brokerage houses, I think one of partly the fears in the market is the fears that you're seeing in the overall market, that if this trend continues, eventually it will probably lead to lower volumes of trading water and therefore lower valuations for a shorter period of time. And hopefully that theory is wrong.
Okay, let's pull up the cement stocks, and they are doing extremely well today. Pull up Ultratech. Ultratech is up over 1.5% in trade. ACC has started to move up. Ambuja has started to move up. ACC at the highest point of the day. Let's pull up Ambuja. Let's pull up India Cements. Let's pull up Dalmia Bharat, was at a fresh 52-week low till yesterday. It has managed to inch up in today's trade. What I can see is Star Cement is moved up. So cement as a pack is doing well. Chakri, is it the right time for someone to invest in cement? Most of these counters have corrected 30, 40, 50% from their highs. Would you venture into cement?
Cement stocks, one, like you said, have corrected. Second, the demand, the volume is strong, but the pricing has not been there. Of course, today is a day where, there is the stocks or expectations that GST might be cut on some of the cement names. But I wouldn't hold my breath for GST, because then you'd have the anti-profiteering and all that clauses to ensure the pass-throughs. But they're trading at low valuations. If you take Heidelberg, you take Ultratech, and all these names, valuations are attractive, so I would start buying into these.
Yeah, but news came in yesterday. There was this Morgan Stanley note indicating that across North India, price hike has been taken. Today, Citi came out with a similar report. They also said that North India, there is a price hike that has come in a little bit in the southern part of India. Do you see pricing coming back to cement companies, given the fact obviously monsoon will have an impact on them? But despite monsoon, there is pricing that they take, price hikes that they're taking.
Price hikes is something which should have come maybe a quarter ago, did not happen. Now it's happening. It's a good thing. So yes, I think that's a good sign that along with demand, there is pricing power beginning to come back. And clearly, yes, the stocks have corrected. I will buy into them.
Just a quick update. 2 or 3 some interesting moves are happening. Avanti Feeds, and we'll get the management a bit later on. The stock is up 18% today, 611 points right now, on 613 on Avanti. Info Edge has gained substantially post this acquisition. Darshan was speaking about it all through the show in the morning, and Info Edge is up about 7%. You can, of course, the interaction has already happened with the management. You will get a slice of that conversation on the site in due moments from now. And KRBL has recovered some bit of lost ground, up 3.5% after starting off way lower. So watch out for KRBL as well in the session today. Chakri, if somebody, 2018 doesn't seem to be a year of returns coming in. It probably gives you a chance to correct your portfolio, maybe make some bets with a slightly longer term perspective. Where is it that you're comfortable putting fresh money to work right now? Because like you said, I remember our conversation 6 months ago, you did think that PSU banks could show some bit of flavor. That landscape has moved quite strongly. So maybe there is not enough certainty in hope stories. Are you betting on certainties right now where the valuations have come off, or are you betting on hope stories wherein the promise of growth is there, but we don't know what the landscape could be like?
Good question. Some of this hope was actually underpinned on concrete government actions and pushing through events happening, which have got delayed for various reasons. So against this backdrop, now trade wars weren't there, now they are there. So what do you do against this backdrop? Domestic is still weak. Exports look uncertain to an extent because of potential trade wars. They're not real trade wars yet. So an Indian market is corrected. So one, to avoid trade wars, I would buy the domestic names, which is banks, infra. And 2, sectors like pharma and IT, which are usually not impacted by trade wars, because these are more IT is a service-related companies. This is not about creating local jobs, etc. And so from that perspective, those are fairly insulated. But in a trade war, if it just comes down to the export-import differentials between each country, then these sectors also can get hit. But that would be the approach, which is domestic sectors, banks, infra, and IT and pharma.
So let's talk about IT. Mid-cap IT has already rallied, but the move hasn't been very sharp on the large cap, except for a TCS. What do you make of the valuation gap between TCS and Infosys? Do you think that Infosys has still much more room to play catch up to Infosys? Infosys has much more room to catch up with TCS now?
TCS is executing really well. Infosys, the new management is taking baby steps to correct its path. So against this backdrop, TCS will retain its valuation lead, and so I'd see that thing for continuing for the near term at least.
And what about the other ones, Wipro, HCL Tech, and Tech Mahindra? Anything that you feel that should be accumulated at these levels?
HCL Tech has corrected, post its earnings results, fairly good results at that, and so I would clearly, and fairly visible earnings, so I would buy it, HCL Tech, as well as Tech Mahindra at current levels. Both. I mean, Tech Mahindra is also looking good for different reasons, which is its billing book is looking good.
Okay, my last question, Chakri, and that is anything which is down in the dumps and looking good. So there is one set of stocks wherein the valuations have come off. The stocks may be at 52-week lows, but not down in the dumps. There are companies which are trading at substantial multi-year lows as well, for whatever reason. Maybe fundamental reasons which could correct over a period of time. Are you looking at that space at all?
I think that's a space which I'll continue to stay away from.
Stay away.
But valuations which have corrected over the short term, those are largely more or less unfounded or unfounded fears kind of things.
Okay. Interesting. Chakri, Lokapriya, very good talking to you today. Thank you so much for being with us and giving us your thoughts. Really appreciate your time. And look forward to having you more often on this.
Thank you so much.
Thank you.
Well, that's the view from Chakri Lokapriya of TCG. Let's slip into a quick break on that note that the markets are doing a lot better than what we would have thought otherwise. The Nifty, in fact, is in the green, marginally in the green, so it's not been a bad day. I don't think the rest of the Asian Pac is doing that. Just bring up the rest of the Asian Pac and try and see what's happening there, because Asia was very, very weak, well, actually even Asia has recovered a little bit of lost ground.
I think most of the Nifty companies have managed to move into the green. Be it I think UPL is at a 52-week low, but apart from it, Asian Paints, HCL Tech, Maruti, BPCL, Coal India, all of them are trading at the highest point of the day currently. Grasim has moved up, HCL Tech has moved up, BPCL has moved up. That's the entire list. I think most of the Nifty companies and Nifty has actually managed to move into the green. Interesting start with most of the Asian indices down. I think we managed to recover.
Okay, take a break, come back and talk about a stock which has made it a habit of trading at new highs, Dollar Industries. The management joins us on the other side.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you. Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior most editors. Weekdays at 8 a.m.
back with Indian Open right here on Bloomberg Quint. Let's talk about companies which are doing well. We've spoken enough today about stocks which have not done well with Chakri Lokapriya. Let's talk about companies which are doing well. Dollar Industries, very big player in the Indian hosiery space, but the competition is heating up with global players like Joshi inking long-term contracts and continuing their long-term contracts with Page Industries, for example. Dollar's turning focus to turn into a premium play as well. They're trying to do that in a meaningful way. It's entered into a JV with Pepe Jeans to tap into the higher margin business. May not be an easy transition for a company, especially a company who's historically always targeted for the affordable segment. So how would the next maybe 3 years shape up for Dollar Industries? How is the growth looking like in all of that period? To talk about all of this and how will they plan to make the transition, Ankit Gupta, the Vice President of the company, joins us right now on the show. Ankit, good having you. Thanks so much for taking the time out. Ankit,
morning.
You obviously done well over the past few quarters, years, on the operational front, on the revenue front. What's the strategy 3 years out? Would it continue to remain on the mass market, and will that be the driving force for you, or do you believe this premium aspirations in select segments that you have could well become the focal point over the course of the next 3 years?
Okay, as everyone knows that the company started as an economy brand, like a brand for masses. But over a few years, the concept of premiumization has risen so much that everyone and even our company is also focusing on making premium products, but at the same time creating aspiration value among the consumers so that we can grow at a faster rate and we can deliver a better quality product and at affordable prices for them. So from Big Boss, we started a few years back, like 2 years back, we started with our brand Force Next. And 4 years back, we started with our women legging brand, which is Missy. So both are premium brands, and going ahead in next 3 years, we see a concept of premiumization also applying to our company also. And the sales mix would change. We'll move towards the premiumization, and yeah, that's how we see the company grow. And also with Pepe JV that we have done, we are targeting a whole new segment, a whole new market, a consumer segment. So the target market would be different. It would be very premium. So it would be a notch higher than the other international brand which is available in India.
So what, this premiumization will account for what, about a third of your revenues in about a couple of years?
No, not really. Actually, if you see, the company has a history of 40 years, right? So more than 40 years. The company started in 1972, and the economy range is almost 33%. That accounts for 33% of our total sales. And the mid-premium brand, which is a class for mass, Big Boss, that accounts for around 44%, right? So and these Force Next and Missy are really very new brand. So although they have a percentage in the pie, but taking them to a 33% level would be a bit difficult, because the other pie has to be equivalent. Like Missy is a 60 crore brand, Force Next is a 20 crore brand, but Big Boss is a 400 crore brand. So obviously, like, to bring it to 33%, it would take time.
Okay. This premiumization that you're talking about, will it aid your operational performance as well? Over the last 3 or 4 years, as I see, your margins have moved up almost 400 odd basis points. What's the way ahead? From this 12.5 that you may be at currently, where do you expect the operational numbers to go up to?
Talking about EBITDA, yeah, obviously, as soon as you move to premium products, what happened is the rise in cost is not that much as compared to the rise in the pricing. So if you add 10 rupees of cost to your product, and you can just sell it off adding 30 or 40 rupees in your product. So that kind of EBITDA margin is there in the premium products. And also with Force Next and Missy, like the new premium products that we have, it has better margins, it has better EBITDA margins as compared to the Big Boss brand. So yes, the margins are to improve, and if you talk about this fiscal, we are looking at around somewhere around 13.5%.
So, you know, my colleague Agam, who tracks your company very closely, sourced out some of the expectations that the street has. The street believes you could do about 1,200 crores worth of revenue, 13.5 EBITDA margins, which you just confirmed as well, and bottom line numbers which could be closer to 85 odd crores. Are these reasonable estimates looking at how this year has started off for you?
So, I think if you talk about the top line, it would be like we aspire to grow at 15% CAGR over next 5 years, right? So we always say that by 2023 we'll be 2,000 crore company, and the EBITDA margins, and yeah, so likewise, because we don't have much of a capex plan as well, so no major changes in the depreciation and the interests.
What you'll be able to meet all of the expanded demand through your current capacities?
Yes, because the industry is very much job work driven. So what happens is increasing your capacity or like the production or the manufacturing isn't a big deal, right? You don't need to have internal capacities or like own manufacturing unit or something like that. So job works are enough in the market, and you can always increase your productivity level or the capacity as and when needed.
Okay. One concern that people seem to be having about your company compared to some of your peers is the stretched working capital cycle, which is lengthier, I believe, than what competition has, and therefore your free cash flow generation compared to competition again would be a lot lesser and a lot stretched. What are you doing to address this, if indeed you are concerned about this?
So I think if you see FY18 data, like the yearly data, all the companies are almost neck to neck, right? We'll keep apart Joshi because it's a cash and carry model. He practically doesn't have any debtors, right? So 90 days of inventory is very 90 days of inventory is a very usual thing in our industry. This is because of your raw materials also, which accounts for around 45-50% of your total inventory, and the debtor thing, yeah, it is on a higher side at the moment, but yeah, going forward, we see a scope of reducing it to around 80-85 days.
Okay. By when do you expect this can happen?
By the end of the fiscal.
Okay. My final couple of questions. The growth numbers that you're talking about, this 15% CAGR growth number that you're citing, will this be a factor of prices moving in line with inflation and volumes being the principal driver, or would it be a combination of both price and volumes?
So it would be a mix of both, the price and the volume, but a major part would be played by the volume itself, and prices would play around 5 to 5.5%, 5 to 6% of the part.
Interesting.
So majorly it would be possible.
So I'm just wondering, for a company which now has fair bit of brand recall in an industry when unorganized is dominating, and therefore the scope of growth is immense, and the industry by itself is growing irrespective of the unorganized versus organized, are you being conservative with the 15% target, because half of it or 5% of it comes by price, which means you're citing about 10% volume growth CAGR for the next 5 or 6 years? Are you being conservative? You don't want to grow faster than this?
I would answer it in a different way. It's better to underpromise and deliver better numbers than like overpromising everything and all. So what I'm talking about is the organic growth only. So we are also looking for inorganic growth, like an M&A type of thing for our company.
So anything on the anvil in the near term?
So we are there in talks with few of the companies, but yeah, it would take time.
But would these be large, or would it be fairly small acquisitions and multiple acquisitions that you would do?
It would be mid-sized or a regional look, like a zone-specific brands which are present in like a zone-wise. They are very strong in that particular zone. So it would be such kind of M&As that we are talking about.
Okay. We'll leave it at that. Ankur, thank you so much for taking the time out and being with us, and all the best. You've, of course, rewarding your shareholders well. Keep that up.
Thank you.
And we'll talk to you post your numbers. That's Dollar Industries. The stock has done really well, remarkably well, really in line with Page Industries. A couple of these stocks have done exceptionally well in this year. YTD performance, if you see, the stock is trading close to or at 52-week highs. So doing rather well for itself is Dollar. This year, it's come off, but in the recent past 1 month or thereabouts, Dollar Industries seems to have done really well for itself. Okay, what is doing well in today's session, though, is Avanti Feeds. And the stock, I think, post this corporate action is about 17-18% the last time I saw, 18.5% up in the session today. Now, India, everybody knows, major shrimp exporter in the world, can't seem to get enough of this product. What's spoiling the picture, though, is rising shrimp feed costs, something that Sumit Sarkar was talking about some time back. And this, coupled with the moderation in prices in the US, means lower margins for shrimp exporters. Joining us now to talk about this in greater detail is one of the largest shrimp feed makers and also a shrimp exporter, Avanti Feeds. Mr. Alluri Indra Kumar of the company joins us right now on the show. Good having you, Mr. Kumar. Thanks so much for joining in. You know, we were doing this small analysis about a month ago about the fall in prices and the rising shrimp feed cost, which could be eating into the margins of companies like yours and maybe some of the others. Is this a real and present problem, or is this something that will, or even if it is there right now, will go away with the passage of time?
Yeah, it is a temporary effect, and it actually in the beginning of the year, for 2 months, there was a sluggish demand for the shrimps in the US market because of the climatic and weather situations. And now the demand has slowly started increasing, and also the prices were very high the previous year, and so the prices are getting adjusted of the shrimp. And now it is slowly increasing and the demand has grown up.
Okay, so you're saying that it lasted for what, April or month of May, and in June has been seen a better month?
Yeah, slowly it is May, June has seen better months because as per our company perspective, we have good orders, and even the prices in the beginning of the year were very low, and now demand was low because supplies were very high, and now it is stabilizing.
Interesting. So let me then try and talk about the near term before we talk about the medium term, Mr. Kumar. Despite challenges, you did reasonably well in Q4, at least on the top line growth. I think, if I'm not wrong, your revenues grew about 24% in the Q4 of FY18. But margins came under a slight bit of pressure. If that was the scenario when things were not looking all that good, are we to presume that Q1 will indeed see improved performance? Because I did hear you say that both May and the month of June have looked a lot better than what the month of April was looking like.
See, if you take the feed sector, the raw material, which are commodities, the prices have increased. See, our sales have grown up, but the raw material prices have increased. You have to take the standard, not 2018-19, but you have to take 2016-17 as a base year. See, last year it was a good monsoon, so previous good monsoon was there, and last year prices were of the raw material were low, so the margins were very high. We got around 20% margin last year. But on average, it is 10 to 15% is the standard margins, what we operate on. So a good year will get more benefits. But this year, raw materials have come to the same levels of almost 2016-17. So I think it would be the raw materials for the feed also are softening because again the good monsoon has started, and it would be quite interesting. It is raw materials are coming down.
Seem to be suggesting, Mr. Kumar, that we will see some impact. I'm not putting a number in your mouth, but you seem to be suggesting that there will be some impact that we'll see in Q1 itself.
Q1, yes, there is an impact on the raw material because the raw material prices have increased. Yes.
Oh,
definitely.
Sorry, you are saying that there could be a further margin impact in Q1 or downside?
Q1, it will be almost same. Around we'll be around 12% margin. Okay. Yeah, 12 to 15%.
Okay. Now, Samit Sarkar, my colleague who tracks your company very closely, made some interesting points about what the way ahead could be like. You and other companies, your peers, are all increasing your focus on other global markets as well, I presume, to reduce the dependence from the US. What is that current exposure, and how will it move over the course of the next 12 to 24 odd months?
The US market is the major market for the Indian shrimps, which is approximately around 60%. And comes European markets, and now the Chinese market is improving a lot, because the Chinese earlier they used to export, and now they become net importers. And the Chinese import of shrimps shrimp is very high, requirement is very high. The Chinese market is a new market for India. Earlier, India was exporting to Vietnam, and they were reprocessing and exporting to China. But now China has will become one of the major markets for India. And also the other Middle East and other markets are also opening up.
Okay. So what does all of this do for FY19? There is an ICICI Securities report, Mr. Kumar, which cites that your numbers, FY19, the bottom line numbers, because of margins or otherwise, could actually show a bit of a downtick before it starts moving up again. Is this a correct estimate?
Yes. Because FY19 closing, there'll be a slight, I think because the prices they have to be adjusted, and also last year, if you take even last year, the prices were very high. They are getting adjusted because shrimp price compared to other meats, shrimp was very high. Now it has been being adjusted, and the consumption is going up.
Yeah.
So the requirements, demand will be more, and definitely there will be some slight reduce in the margins, and then it will increase.
Okay, so you are saying that the top line growth will be there because of the higher demand, but the margin impact will be felt on the bottom line, and therefore FY19 profits will be lower than FY18 profits.
Yes.
Okay. Fair call. One last question, Mr. Kumar. Any kind of equity market fundraise that you would need to consider at all over the course of the next 12 months?
Right now, we are not anticipating anything, because we are doing all our expansions, and all our requirements are met with the internal accruals, and we are comfortable without going for virtual market.
So no expansion plans? Is that because your capacity utilization levels are not optimal right now? You have a chance to increase the capacity utilization?
No, we have completed our expansion just now, like in March, we have completed a feed plant expansion, which has added another 175,000 tons. And last year, August, we commenced a new processing plant, which is around 15,000 tons per annum capacity, which completed last year, 2017 August. And 2018 March, of a new feed plant has commenced. And we have put up some additional capacity in-house, so that anything requirement can do within that.
So what's the utilization levels currently, Mr. Kumar?
The feed on the feed side, we are operating around 90%.
90%. Okay.
And on the processing side, we are around 60 to 65%.
Okay. There is maybe scope to improve that. Good having you, Mr. Kumar. Thank you so much for taking the time out. We'll look forward to talk to you post your Q1 numbers as well. But thank you so much for taking the time out and speaking to Bloomberg Quint today.
Thank you.
That's Avanti Feeds. The stock is up about 18% in the session today. The market's not doing all that bad too, I must say. You're well and truly in the green. Stocks like HDFC are aiding. Bharti Airtel marginally in the green as well. ITC is in the green. So these are heavyweights which seem to be doing rather well for themselves in the session today. And just a quick mark of what's happening at the broader end of the spectrum. Aside of Avanti Feeds, Info Edge, Prestige Estates and Radico Khaitan are the ones in the green. Idea has bounced back from the lows of yesterday. But Heritage Foods continues to grind lower, down another 5.5% after the 6% gash that we saw yesterday. Time up completely on this leg of Indian Open. It's a goodbye from me and the team that put this show together. Stay tuned to Bloomberg Quint Live though. Up next is the FNO show.